very good morning. It's Friday morning. You're watching India Market Open. We've had a volatile week and it seems like there could be a little bit of Friday cheer coming on the street despite the fact that global cues aren't too supportive this morning. They're at the flat. So nothing much to take home from, but a big trigger in form of the non-farm payroll data from the US later today.
Yeah, I mean, firstly to both of you, very good morning, and to all our viewers who are our Jain friends, in advance, Michami Dukadam. And to everybody who is celebrating Lord Ganesha's arrival, happy Ganesh Chaturthi.
It's going to be a busy weekend.
Yes, it's going to be a beautiful weekend.
You know why this is also a very exciting time of the year? Because it's heralding the festive season, right? Starting from now all the way to 31st December.
Yes.
You have all the fun stuff.
It's the best time
begins.
of the year.
The fun stuff.
The fun stuff begins. So, not a lot of fun stuff on the US markets, though. To be honest. Yes, the big non-farm payroll government data comes out tomorrow, but a private payroll data gauge, which has come out a day earlier. By tomorrow, I mean tonight, actually India time, you'll see the official non-farm payroll data. ADP data, which is a private payroll provider, also has put out data, which is not exciting at all. And markets have seen this as negative. So if you look at how US markets have closed, they've closed in the negative largely. Futures also pretty much, not too exciting. So this is what the ADP data is showing you. Nasdaq was flat, Dow was down, S&P 500 was also down, Dow down about 200 points. So the ADP data has come in at 99,000 hires in August. It basically looks at how much hiring has taken place. It's the lowest level since 2021. The growth in jobs is the lowest since 2021. The expectation was you would see about 140,000 jobs and hires being created in the month of August. So is this an inkling to what we will see with the official government-backed data is the question. And that's why there has been a bit of a negative sentiment and once more these concerns about whether the Fed has waited too long to cut interest rates, which they are likely to do in September. Bond deals also in tandem. Not too much change, pretty much range-bound, and the 10-year at 3.72. Crude is an interesting story. OPEC Plus has finally said that they're putting off their increase in output. The reason is because of the kind of drop in prices that they saw. And remember, for a lot of these countries to get their own balance sheets in place, they need crude to be above the $85 mark, Brent to be above the $85 mark. They're, of course, very far away from that right now. So they've postponed that bit. But on the other side, demand concerns still continue. So which is why you've seen Brent just about that $73 mark even now. I'll quickly pull up Asia and see what the Asia Open looks like. Not half bad. I'd say flat to positive at the most. Nifty India implied open, we'll take a quick look at that as well. That's showing about 61 points down. And so that's setting up kind of a mixed day to a pretty tough week at the end of it in terms of spotting where the direction is.
Just one quick one I want to come in on. Up until 2 weeks ago, there was a 90% chance of a Fed moving with a 25 basis point rate cut. We eventually got to 99% of the market believing that. If you look at some data, and especially in the gold market, those chances have changed in some ways. So now I believe there are traders who are betting on a 59% 25 basis point rate cut and a 41% of a supersized 50 bips rate cut. Now, I guess if that does happen and if data is weakening, we may be getting more than anticipated, which hopefully could cheer markets, even though I know Citi doesn't think that may be great for India in the short term.
Yeah, maybe we'll talk about that as well. But just before we go to Matt Orton, the other small piece of news, or maybe actually a big piece of news from a China perspective, China has created a behemoth to take on Wall Street banks, $230 billion brokerage firm via a mixture of two firms, so overtaking Citi as the largest investment bank in the country. They are saying that in 2035, Chinese banks should be able to take Wall Street giants.
Still playing a 10-year game.
Quite something, yeah.
Just also, I think Hong Kong is closed today, so you've got a holiday in that market. And I think Japan's data as well has been slightly disappointing. So not a great Friday morning for Asian markets at least, but lower crude could be good for us.
Yeah, absolutely. Let's get Matt Orton in on this. He's head of advisory solutions and marketing and market strategy, also the chief market strategist at Raymond James Investment Management. I hope I got all of that correct, Matt. But either way, very good morning to you from where we are, and great to speak with you as always. Let's just get your take on the private payroll data which has come in, and of course the whole anticipation for what the non-farm payroll data is going to look like in August. What is the kind of range you're expecting, and then what would that mean to how the rate cut scenario is being strategized?
Hi, good morning, and it's great to see you and to be back. And I think that the private payroll data versus the non-farm payroll data, it's always hard to determine how one correlates to the other, because when you look back at most of the data points, it's very noisy between ADP and NFP. So I'm not sure how much we can or should draw from what ADP was today versus what we're going to get tomorrow morning in the US from non-farm payrolls. That being said, the market is entirely focused on what that number is. And I think the main message that I give is we're in the mode where good news is good news, bad news is in fact bad news. So I think if there is significant weakness or significantly disappointing numbers that we get in the morning, I think that will increase the likelihood that you do see a larger than expected rate cut right now in September. So my base case is for 25 basis points. I still think the economy is in good shape. Overall, you're not seeing intentions for larger layoffs, and you usually don't see that when corporate profit margins are sitting at the levels that they are. Small business optimism is starting to improve here in the US too. So there's still a lot of positives to take from this, but certainly seeing a weak number after a surprisingly weak number from the month of July, that certainly puts up, I'd say, our fear flags just a little bit. But I still think earnings have been good, and I would still encourage clients, if you do get significant downside, to use it opportunistically in high quality pockets of the market.
How likely is a US recession at this stage?
I do not think we're going to have a recession. I think it's clear that economic growth is slowing. We all know that economic growth is slowing. I don't think, based on the totality of the data that we have right now, and based on what I'm hearing from corporate management teams and what their capital allocation plans are, I just don't see that happening, especially given where fixed business investment is, CapEx is in this country. So the AI theme has definitely helped. Infrastructure spending in this country has certainly helped. Bringing supply chains back to the US is and is going to continue helping. So it's hard to see a full-blown recession. I do think what we have seen, though, is this idea of rolling recession. So different sectors and industries of the economy have moved in and out of recession over the past 2 years. We just haven't seen it all happen at the same time. And I think that is because of the distortive impacts of monetary policy. And so the likelihood of seeing that unified slowdown across most pockets of the economy, I still think that's fairly low probability.
Matt, so do you reckon that between the non-farm payroll data release and the Fed action on the 18th, risk assets could take a decisive opinion and make a decisive move, or will they wait for the cat to be out of the bag?
I think risk markets are going to oscillate up and down. I think we're going to see increased volatility heading into the actual Fed meeting. Even if the data we get tomorrow is conclusively bad or conclusively good, I think that will inspire a larger one-day move in the market, but it probably gets reversed through trading and a lot of other data points that we're going to get between now and then. The market is just very hyper-focused. We also have a presidential debate that's going to take place, and so there's a lot of election noise that I think might also cause investors to be a little bit hesitant about putting money to work until we really hear what the Fed says. And so I think the most important takeaway when we look forward to the Fed's meeting in September is their summary of economic projections. How much is the Fed going to change their outlook for the economy going forward? Because I think that's going to dictate both the pace and the depth of the rate cutting cycle. And that ultimately is what the market's going to focus on. That's what's going to drive interest rates. And then as a second order effect, help guide some of those more rate sensitive pockets of the market, and also maybe give us something to hold on to if you're investing in more cyclical areas. But again, I think what I encourage investors to focus on is this is why you want to have a diversified portfolio. And this is why you want to own higher quality companies where you're already generating free cash flow, where you've had a positive inflection with respect to earnings growth, and there's durable secular growth trends behind it. Because regardless of what happens to the economy, those businesses are going to weather any storm well, and they can also grow and are levered to more positive growth that we might see too. So that's I think the main takeaway from all of this.
Matt, just one point on FII flows in India, and there's a Citi note out this morning which says that perhaps post the rate cut, FII flows may not come into India the way it has been anticipated. Just wanted to know your take, and how the emerging market in India scenario will be viewed post a rate cut in both cases, a 25 basis points or a 50 basis points.
So I think you've got to look at the short term versus the long term. I think in the short term, you might see FII flows start to slow down just because of the opportunity set that you might have at home versus India. But I think heading into the end of the year, we've talked about this before. I'm very optimistic on the Indian outlook going forward. And I think investors as well, especially if we do get rate cuts, that's going to weaken the dollar relative to other currencies. And that net is positive for emerging markets, which are largely under-owned by a lot of the institutional clients and large brokerage firms I talk to here in the US and abroad. And so I think if you see that, you're going to see more of a rotation. India benefits from that, from an increasing weight, hesitancy to invest in China, and the fact that India really is the global growth story. Where else are you going to find 7+% GDP growth going forward with good private sector earnings growth? It's in India, and that's one of the only games in town in the emerging markets where I think investors have a lot of confidence. So I think there's still a very good story longer term.
Right. Thank you very much, Matt. Great chatting with you. Have a good Friday and have a great weekend ahead.
Well, you too. Thank you.
Thank you very much. Implied Nifty is indicating to a muted start this morning. 60-point cut is what we're working with, at least in early minutes of trade. It will be about stock-specific action, and that's largely what the markets will like to focus on. Before we set you up for trade this morning, a quick recap of what happened yesterday. The Nifty oscillated in a 150-point range on the weekly expiry day, which was yesterday. It has ended lower in trade despite a positive start yesterday. Now, we had a positive start irrespective of how global markets sits. We defied global cues, opened higher, but finally went home with cuts towards the close of trade. On Wednesday and Thursday, Nifty did make an attempt to test 25,300, but it has failed on both instances. Remember, that becomes an important resistance for the Nifty to take out to head towards levels of 25,500. Closure on day's low is usually a negative for bulls, so markets are not going to be too impressed, or rather were not too impressed as we go into trade this morning. RI led losses amongst the Nifty 50 despite a bonus issue. You had buying that was seen sporadically in stocks like HDFC, ITC and Wipro that helped and negated the cuts that stocks like RIL witnessed. For the week, we are down 90 points as of yesterday. But also what has stood out is while Bank Nifty has been a slow mover, it's actually outperformed the Nifty up 0.2% between Monday and Thursday. But if we do end lower today, it could be the first weekly loss, Niraj and Tamanna, in over 4 weeks for the Nifty. And it seems like that could be a possibility with at least what we're getting in terms of early cues.
Perhaps, but I don't know if it will be too negative in the broader picture to have a bit of a cool-off in this market. I mean, fund flows, though, have overall not been that bad, if you look at it. I just pull up yesterday's fund flows, you have foreign investors selling about 689 crores. But there have been no massive outflows so far from FIIs. DIs, of course, have stayed steady, 2,971 crores in buys. I think the big question, though, Niraj, and I don't know what your take on this is what is the overall strategy, or there's no clear picture in which stocks, which sectors, or where the momentum goes. It's very individualized, isn't it?
Yeah, and maybe IT is finding favor with brokerages, so maybe that one for today. But yeah, aside of that, almost everything that has promise has done well. So who knows?
If we are going to be volatile because of global cues, you would imagine IT would be on the sell side, no? Between now and the elections, at least?
But a rate easing cycle typically should augur well for tech by and large. So
if you're a bull, you'll find your reason. If you're a bear, you'll find your reason.
Exactly. Yeah, but it's an interesting point that both Samina and Tamanna make, and that's a part of the trade setup, because if you look at call writing in the last 5 sessions, that has been very intense on the Nifty, and hence there has been a bit of a downward pressure that is there. But somehow quant indicators still indicate an upside. So keep an eye out for that. The optimisms need not go away. Thus far, it is still a buy the dips market, as the trading day when the world markets were way lower yesterday and how India performed showed. So there's a buy the dip strategy still intact. For the Nifty Bank, though, we are at that point of maximum resistance. Almost every note that I read yesterday spoke about how 51,500 or 51,750 is coming out to be a key point of resistance. So watch out for that, particularly the Bank Nifty if it underperforms, because yesterday it actually did much better than the large caps. Yesterday, by the way, the small caps did really well relative to the large caps. The Nifty may have been down, but the small cap index was up nearly 1%. So no problems there. And IT started to find more favor with brokerages. Who knows, could be outperforming today as well. Yesterday was up about 0.5%. The Citi note on Wipro was out yesterday. Wipro was up and about in trade yesterday. Today there's a Morgan Stanley note, and we'll talk about that in detail. But keep an eye out for IT. May continue its bout of outperformance in today's session.
Niraj, just one quick one, right? So I know Bank Nifty has been so precariously placed all through August, and now, of course, early days in September. But what is sort of catching my attention is how PSU banks are doing. The PSU banking index is down 1.7%. So even if the buying is coming in, maybe the private banks that everyone's been betting on, that trade hasn't played out. If Bank Nifty does hold up and do well, I do think the leadership could come in from private banks as opposed to PSPs lending the support. But this is as much as I feel, more than really.
I mean, SBI, for example, the last week of August as well as the month of August has been a rank underperformer. So you're absolutely right. PSU banks.
And even the smaller ones, right? You look at the Bank of Baroda's, the Indian banks, Canara banks, all been down and out. Of course, the indexes are 47% this year.
Look at your small finance banks. Look at, so what Atul Suri was saying yesterday to us, how he split banking and financial.
Yeah.
He's looking at it at 2 different pieces. But yeah, SBI would focus today also on the back of brokerage notes. And remember, we're speaking with the new boss in SBI, CS Sethi. You will hear from him on NDTV Profit ahead on the show today at 9:30 p.m. So stay tuned for that as well.
Yeah, but it's now time to go through all our stocks this morning. We've got a few that you should be tracking in early trade. 3 of us will take you through those. First up on my list is Adani Enterprise, and this is an important update announcement coming in from the group. They've announced an early closure of their 800 crore NCD issue. The date has been moved forward to today, as opposed to earlier, which was supposed to be 17 September when the closure was expected. Now, what really does stand out is that they've been oversubscribed, and not oversubscribed a few times, but oversubscribed 221 times on day 2, which was yesterday. So huge positive coming in there. All the supply that they put out on the convertible debenture side has got lapped up, and the participation has come in from retail. So that also stands out for us. This is also the first non-financial NCD issue that we're seeing in this year. So there's a lot of excitement around this one, and hence the company and the management has decided to close the issue as early as today versus 10 days out, which was 16th of September. You would see a positive reaction on the counter. I would imagine that should be given largely on back of this. Quick disclaimer, if the channel you're watching is owned by the Adani Group as well. Well, a few more stocks that I'd be tracking. One is Prestige Estates. They did a QIP. We talked about this a few weeks ago. Closed the QIP day before yesterday. Successfully have raised 5,000 crore rupees. Now, what again has worked really well for Prestige Estates is the kind of people or institutions that have come in and bought into this QIP. To name a few, you've got ICICI Prudential, HDFC Life Insurance, Aditya Birla Sun Life Trustee, New World Fund, NPS Trust, etc. are some of the large participants in Prestige's QIP. The vote of confidence by them will fuel the sentiment for retail investors, and Prestige could be getting a good sort of day of trade over the next few sessions. The other one usually reacts to order wins. Another order win coming for KEC International. And this is a big one. They've bagged an order for 1,423 crores for supply and installation in Saudi Arabia. The stock went home with gains of 6% on a day when the trade was muted. Their total order book in FY25 so far stands at 11,300 crores, which is a 75% increase year on year. So KEC positive, Prestige Estate is a positive, and of course Adani Enterprise early closure of the NCD is also a positive.
You know, we've been talking about the appetite for paper and equity, but even on the debt side, I mean, it's astonishing the kind of participation that has come in, and of course that you have to close that issue earlier is really
a turn in the rate cycle. I think it's lap up as much as you can right now.
Absolutely. All right, the three stocks on my watch. Niraj has been speaking about IT, and the first one is an IT company. Wipro is what we're talking about, and Wipro has been sort of, I would say, relatively bucking the trend. Maybe you could say it's one of the last to react in the last mini IT cycle we saw. But anyhow, the news that's coming in is that they have got enlisted by the JFK International Air Terminal to meet their sustainability targets. The company has not really put out details of the size of the deal or any other kind of pointers there. But nevertheless, it would be a positive sentimentally for Wipro. Jindal Stainless is the other one. They have supplied stainless steel for the Vande Bharat sleeper coaches. The prototype was unveiled by the Minister of Railways recently. It's designed for an overnight journey, and they're manufactured by Integral Coach Factory, ICF and BEML. So those companies as well could see a positive upgrade over there. So Jindal Stainless is the other one. Ashoka Buildcon actually had started seeing a bit of a run-up towards the close of trade yesterday as well. There you have it. Look at that massive spike, 13% up yesterday itself. You could see a bit of a continuation that there. The company has announced that its wholly owned subsidiary, VHL, that is Viva Highways Limited, has monetized its land in Hinjewadi, Pune, for a total value of 453 crores. So that could be an upside for Ashoka Buildcon. And those are the top three on my list.
Ola Electric might be interesting today, simply because while the stock was up and about yesterday, the anchor book, 50% of the anchor book lock-in has opened, and those shares are free to trade. So if you see downward pressure on Ola Electric, it could be a technical factor and not necessarily something fundamental associated with it. So bear that in mind. It's certainly something that you want to keep an eye out for, particularly because it's had a strong day in trade yesterday. So that's Ola Electric, the first one on my list. Not quite sure how some of the IT names per se behave, but while Wipro had an uptick yesterday, Morgan Stanley's note on IT is interesting. They like LTI Mindtree, which has been upgraded to an overweight rating. They like Infosys and Coforge as their preferred stocks. They are underweight Wipro and downgrade HCL Tech to an equal weight given its sharp outperformance. Also, they are underweight all the ER&D players. So the KPIT Techs, LTTS, Tata Technologies, Morgan Stanley is underweight all of those. And the third one, I mean, there are multiple brokerages, but I just had to bring out the Goldman Sachs note on Vodafone. Because while the talk is about how the target price is 2.5, guys, I mean, they've maintained the sell, and that earlier target was 2.2 rupees. So it's not that the target was 10 or 8 or 15 and they've taken it down to 2.5. It was 2.2. They brought it up actually to 2.5. So they have been wrong thus far.
Now a little less wrong by 50 paise.
By 30 paise, to be very honest. Because
they can't do a complete U-turn, right?
But they've hedged
their face.
No, they've hedged it well. So and maybe as per the DCF, you could arrive at a target that you want, right? And a target that you actually believe. So they said that the DCF-based valuation is 2.5 rupees because they expect the free cash flow to be negative till at least FY31.
But they also said that despite the fundraising, the market share will continue to drop.
may happen because it may continue for a while. But the hedge is beautiful. So they say that the target is 2.5.
Goldman Sachs.
The hedge is that the implied in a blue sky scenario, if everything goes well and if the AGR case is in their favor, etc., then the implied value is actually 19 rupees per share.
Oh.
So the whole gamut from 2.5 to 19.
So it's like pollsters who ahead of any elections give such a wide range that no matter what happens, you called it first in that sense.
You could argue that. The only thing, I will give credit to the analyst, because in the sense that they're sticking their guns out on the discounted cash flow valuation that they are putting out, but they are also saying that by ये hedge hai. I mean, they are answerable to the clients, not to others.
The question is that will the street react negatively to Vodafone on the back of this report? I
doubt the reason, which is why I thought it was important to highlight that it is not that they've downgraded 2.5.
They've upgraded it.
From 2.2 to 2.5.
That's 10%, guys.
That's an upgrade.
Anyways.
Some interesting stocks there as well. We'll get some more because a lot of, I would say, eye-popping notes from Goldman Sachs today, including on SBI. But more of that ahead on the show. Just want to focus on this interesting note from Citi because there's so much talk about Fed and what they will do. It's just a week away, that widely anticipated rate cut. And as we look at the rate cut on India and the impact there is a general view that rate cuts could trigger outflows in the short term. Why is Citi saying that? Anushi is joining us for more details.
Hey Tamanna, a very interesting note from Citi as you've mentioned over here. And let's see what Citi is saying on the foreign outflows impact on India post the commencement of the US rate cycle, which is going to happen. So if you look at the first immediate scenario, that is the 1 month, 3 month scenario, if you look at the foreign outflows have been net negative into 3 of these 4 instances, and this is immediately after the 1 month or 3 months following this US rate cut cycle, which has begun. Also, the short-term outflows key trigger, which is looking at, are also because of global risk-off scenarios, with the 2020, the COVID one, and 2008 one being the most pronounced in these scenarios. So do keep a note on that as well. Just a short note, global risk-off is when you're moving your money from the riskier assets to more safer investment bets. So that remains as the 1 to 3 month scenario. But looking at the overall 12-month scenario, if you look at the foreign outflows, they have remained net positive with healthcare, with sectors like healthcare and staples doing particularly well in these areas. Also, very important to note that Citi has attributed that global peers see that India is still very well placed compared to the other emerging markets in there. So that is one important aspect that we should be focusing on. But coming to Citi's preferences and their stocks that they continue to remain bullish on and underweight on, let's break this down. So while they have removed the industrials and the utilities from their sector preferences, on the stock-specific side, now they're adding HUL as their preferred list, seeing improvement coming in from the rural side, the volume growth there, and other aspects leading to it. While in the mid-cap space, they've added Bharti Hexacom after they've initiated a note on this one. But coming to the key overweight sectors, we have sectors like banks, insurance, telecom, and healthcare, which remains as Citi's top picks on sectoral-wise, while on the key underweight sectors where Citi continues to remain underweight, this includes consumer discretionary, IT services, and metals. So this is the overall sectoral preferences that Citi has cited, and what could be the outcome of the foreign outflows post the US cycle, the Fed cut cycle, which will begin shortly.
Okay, thanks a lot for that, Anushi. So that's the Citi note. Remember, viewers, on the flows, Citi is saying that in the past instances, the 1 month and 3 month flows may have been negative, but over the 12-month period, the flows have actually been positive. And the negative flows is on account of a global risk-off that happens at a time of a Fed rate easing cycle. Interesting to see what happens this time around, of course, on the flows front. So that's one thing. And two, I don't know if Indian markets are so correlated right now to global flows because we've done so well despite the flows not being positive.
So much of decoupling that's rather obvious in the street. But I think the problem would be there are outflows. Potential inflows, sure, we can live without them.
Yeah.
But so it's
if they're massive outflows, then that that becomes...
Yeah, and there are so many moving parts, right? Wall Street has done exceptionally well. This is a year when you're getting a rate cut, but you also have US elections. You've also got recession fears that are, underway in the US. So tough to call it, but I guess Citi knows what they're saying. They say that in the meantime, in the near term, it could be negative India. But let's move on from there to what's working for us. India will become the world's largest consumer society by 2050, says Adani Group's chairman Gautam Adani while speaking at Jai Hind College's Teachers' Day event. Business tycoon says that this will be the key driving force behind the country's unprecedented economic growth. Let's hear him out.
I strongly believe that breaking this boundary sets us on the path of becoming the superpower that we have always aspired to be. And as a nation, we have never been closer to this aspiration than today. We stand on the brink of an incredible period where India is poised to become one of the greatest growth platforms the world has ever witnessed. Our nation's greatest strength lies in its youth. A functioning democracy's biggest advantage is the dynamism that comes about because of its demographic dividend. I started my journey at just 16, and I have always believed in the power of our young generations. Today, with a median age of just 29, India is positioned to be the world's largest consumer society. By 2050, the key driving force behind unprecedented economic growth. It is a staggering projections that even in 2050, our median age will be only 39 years. Nothing can be more empowering than being the largest global populations that is fully literate, has a zero poverty, and a median age of less than 40. Mundra became my karma bhumi and made my vision a reality. A powerful testimony to the fact, what you dream, you create, and what you think, you become. Mundra today hosts India's largest port, the largest industrial special economic zone, the largest container terminals, the largest thermal power plants, the largest solar manufacturing facility, the largest copper smelter, and the largest edible oil refinery. And yet, we are only about 10% of what Mundra will eventually become.
Wow. So inspiring words there from Gautam Adani. A quick look now, though, at the IPO market. I mean, frankly, on most days, it's got more action and more exciting than what's happening in the cash markets as well. Samina is now talking about the latest one, Baazar Style.
Tamanna, it is exciting, but unfortunately today's market sentiment may not support the listing the way we'd have imagined or expected a few days ago. But this one's a big one. It's a Rekha Jhunjhunwala-backed IPO. And you know that with anybody who comes with a Jhunjhunwala last name, that IPO is going to get a great response. But let's take you through what Baazar Style is all about and why the excitement around this counter. Baazar Retail is a company, it's a leading player in the apparel business, largely concentrated in the eastern part of this country, which is West Bengal and Odisha. The other core markets that they focus on is Assam, Bihar, Jharkhand and Andhra Pradesh. They are in the value business. Of course, it's not high-end, but it's a lower to mid-segment that Baazar Retail has been focusing on. Well, a couple of positives that stand out for this listing that we're all eyeing this morning. They have a very large market share, but that's concentrated in eastern part of the country. They run extremely efficiently. Their growth is pretty solid, and their management is also rather experienced. Along with that, they've also launched their own in-house labels, which could potentially provide better margins and more control on the supply chain. The numbers are impressive, to say the least. They've grown at a CAGR of 33% over the last 2 years. Top line stands close to 928 crores, while profitability came in at closer to 22 crores for FY24. Well, a few negatives that stand out, which one needs to be mindful of. So not fair to call them negatives, but it's what you want to be mindful of while you're looking, if you hadn't got this allocation in the IPO, if you're looking to buy today, some factors to keep in mind. Geographic concentration. So like I said, they're concentrated in only one big part of India. Maybe as they go along, maybe in the next 5 to 10 years, you may see them become a pan-India player. But for now, any concerns in the eastern part of India could impact the numbers pretty significantly. They depend largely on apparel sales, so there are any changes in fashion in that sense or taste, their business could get impacted. Along with that, they also don't have very significant long-term contracts with their suppliers, which means that they fall out with a given supplier or there are some concerns. There could be delays due to the restricted number of suppliers that they work with and lack of long-term agreement with these suppliers. Valuations, like I said, very stretched. Their P ratios are 124 times, and that's what you want to watch out for based on FY24 earnings. But there are other players in the business who claim higher valuation, but that's already in the listed space. Well, that is what the business is about. That's what stood out for us. But what was this IPO and why did they go out and raise this money that they were looking to do? It's a 800 crore plus IPO that hit the markets a few days ago, backed by Rekha Jhunjhunwala. She was one of the early investors in the business. She, of course, decided to offload some of her stakes. So it was part fresh and part of an OFS, which means that some of the promoters and early investors also looked and were looking to exit from this IPO. Well, the 1.776 crore shares is what the OFS piece was. It was valued at 687 at the upper end of the price band. So that's what you want to keep in mind. She's going to sell out. She's already, of course, given her shares in the IPO to the tune of 106 crores. This one was subscribed quite well, not as well as maybe a Premier Energies, but 41 times was the subscription number from on the last day of the IPO closing. Well, what are we expecting today? You want to keep in mind that the broader market sentiment usually has an impact on how a company lists on the street. This morning, we're expecting a slightly lower start. So what we would be getting is a 10 to 12% upside in early minutes of listing of Baazar Style. The listing is expected in the range of 445 to 453, depending on how well the markets are doing at 10 a.m. So that's what we have, guys. It's an important one. I think Rekha Jhunjhunwala's name against this IPO drew the support from investors at the IPO stage. But of course, today's sentiment will largely drive how the stock opens up and trade.
Absolutely. So we'll watch out for the D Street debut of Baazar Style. Remember, yesterday Raymond Lifestyle's debut was pretty good. And we'll see if Baazar Style has the same kind of reception from investors. Now, meanwhile, a major fire has broken out at the 7-story Times Tower building in Mumbai in Kamla Mill compound. This is in Lower Parel, and the fire broke out around 6:30 a.m. NDTV's Jui Jadhav is joining for more details on the story.
Right now I'm standing outside Times Tower building, which is at Kamla Mill compound, and you can see right behind me that a huge fire has broken out at an 8-story building at Times Tower in Kamla Mill's compound in the Lower Parel area this morning at 6:47 a.m. The BMC's MFB reported this tragic incident, and as you can see, the fire brigade are trying very hard for the fire to come out. If we can see a video of flames coming out of the Times building, you can see right in front of the channel. As of now, no injuries has been reported. Authorities have declared that this fire is level 2 fire, and the fire brigade team is currently at the accident site trying to control the blaze. The report have been come out, and this incident has taken place due to the AC. The AC, which was placed at the ground floor, bursted this morning, and the fire that has taken place, went straight up to the 7th floor, and as you can see, the fire brigade team is trying very hard to get the blaze in control, and also the police authorities have come to the spot, and after the blaze has been cleared, the cooling operation will take place, and after the cooling operation they will give an official statement that what was the reason for the fire. And as of now, no injuries have been reported, but there might be possibilities that the workers who were working at night shift in this building might be yet inside, so the fire brigade team is also working hard to get them out of the building.
All right. Hope everyone is safe in Lower Parel, and all of our fellow business journalists in that same compound also have a safe and are fine through the day. But let's go across to Agam now, who's standing by to break down F&O cues for the day. Yes, Agam.
Oh, well, yesterday was a day where we, in fact, saw the benchmarks take another step back. It was a very small one, but a little bit of weakness seeping in all the same. And I'm talking about specifically about the Nifty, because that did come off by around 0.25%. Let's take a look at the future space then. And, we didn't see as much change there. There was a little bit of unwinding coming through. The Bank Nifty, on the other hand, was largely flattish, marginal gains coming in, but a little bit of unwinding coming in there as well. Now we move into a new week, and based on that, we are keeping an eye on the marks, which would include something like the 25,000 on the lower end, and 25,300 still on the higher end, because that around, slightly higher than that is where we are seeing the Nifty life high at the moment. And that's also marked by a good amount of open interest being built in the respective puts and calls. Moving on, as far as stocks are concerned, it's been a fairly mixed bag yesterday. And while we did see longs in Syngene, Muthoot Finance and GMR Airports, Chambal Fertilizers and Max Financial saw shorts. And among stocks which saw unwinding, we had PVR Inox along with IEX and Asian Paints looking at a bout of short covering. So interesting names there, but the question really is that what do we do with these markets? Well, we have Amardev Singh of Angel One, who's joining us on the show. Amar, good morning. Thank you so much for joining in. Amar, let's start with your view on the markets in general. How are you trading them?
Yeah, overall, if you look at the markets, we are witnessing some sort of consolidation there. And that's what is evident in Nifty per se as well. So if you look at the benchmark, I would say most of the heavyweights, we are seeing some consolidation there as well, be it Reliance, be it HDFC Bank. Some positive is there on the ICICI Bank per se, but more or less, if you look at the derivatives data also for the next week expiry, we are seeing the PCR at 0.97. So clearly, there's not much of a bullish sentiment, and higher levels are being actually sold into. So it's more of a consolidation, but within a very narrow range for Nifty. So 25,000 on the downside and 25,300, 350 on the upside. So that's the range. But if you look at the trend, overall trend still remains bullish for Nifty. There's no doubt about it.
Okay, fair enough. Amar, then let's talk about stocks. I believe Exide is one on your radar this morning.
Yeah, Exide is one stock one can definitely look at. The stock, what it has done over the last, I would say, since June, the stock has been in a corrective mode, almost from 620 levels. Currently, it's around sub 500 levels, around 495. It's around very crucial support zone. So one can look at a bull spread in this Exide for the September series. So buying a 490 call option and selling a 500 call option. Where the difference is 5 and a target, one can keep a target of 15 and a stop loss of 1. So this is what we are seeing here in Exide is that the stock is at very crucial support zones, and also the long-term trend of the stock remains positive. So there is a possibility, high possibility that we could witness a pullback in the stock. So one can look at this bull spread as a strategy.
Okay. Well, that's as far as Exide is concerned. Amar, is there any other stocks on your radar this morning?
I would say if I look at some of the other stocks, so in that case, one can look at HDFC Bank. HDFC Bank is actually waiting for a major trigger. And what I see is that we've seen some significant volumes there. So if it sustains above the 1660 odd levels, then one can look at buying a call option or maybe a bull call spread also in that case, going for a 1680 and a 1700 pair. But only if HDFC sustains above the 1660, 1670 levels.
Okay, well, there you have it. Well, those are two ideas from Amar, Exide Bank and Exide Industries and HDFC Bank. Well, Amar, on that note, thanking you for joining us and taking us through your views on the markets and, of course, giving us those two trading ideas. But for all those who are interested in perhaps placing a bet or who already have a position in the futures and options space, don't forget to post in your queries to perhaps get a confirmation on whether or not it is a great idea. And WhatsApp it us on the number that's being flashed on your screen. We certainly will be taking up those queries up with our experts today. And that's what we have in terms of the futures and options space. With that, it's back to you, Tamanna.
All right, thank you for that, Agam. Let's talk about one of the sectors on our watch list, which is IT. Morgan Stanley has a note out where they say they prefer tech stocks over engineering and R&D companies. Rucha joins in for more. Rucha, what's the rationale Morgan Stanley is giving?
Right, Tamanna. So Morgan Stanley has come out with a detailed note on the IT sector. Now it prefers IT services over ER&D, which is engineering, research and development. Now we can see that many of the IT names are also acquiring these ER&D companies, and hence IT services is a broad-based portfolio than the ER&D companies. Talking about stocks, the brokerage house has upgraded LTIMindtree to overweight from equal weight and has downgraded HCL Technologies to equal weight from overweight. Now let me talk to you more about this. In LTIMindtree, the positive catalyst that the brokerage house is watching for is the improved deal conversion ratio, stabilizing margins and wallet share gains as well that could aid the company to go ahead. Now in terms of HCL Technologies, many brokerage houses also believe that the valuations are too stretched. At the current price, HCL Technologies is valued at around 29 times its FY25 EPS ratio. The downside include the limited deal wins and share outperformance. Limited signals of uptick in revenue is also one of the negative factors because of which the brokerage house has downgraded the stock. Now talking about the pecking order, it prefers Infosys over TCS, LTIMindtree over HCL and Tech Mahindra both. Talking about Wipro, the brokerage house has underweight on Wipro. But let me talk to you about valuations, which is one of the significant angles in the IT sector. Valuations have become expensive, although the top 4 PE premium to Sensex is 22%. Like the premium of top 4 companies is 22% to Sensex PE. TCS is at a premium of 6% to Accenture versus the last 5 average of 1%. But even after expensive valuations, the brokerage house believes that the macro data such as US GDP growth, S&P 500 earnings are positive for the IT sector. And when you look at the global IT companies as well and the hyperscalers as well, the brokerage house is seeing signs of positive catalyst and pickup in growth trend. Another important positive is the BFSI, that is the banking and financial services. Now this segment was under pressure over the last few quarters, but now this segment is seeing an uptrend going ahead. And lastly, in terms of earnings downgrade or upgrade, the brokerage house believes that Q1 was just the start of a revenue upgrade cycle, and the revenue upgrade cycle is here to stay at least for the next 2 to 3 quarters.
All right, thank you for that, Rucha. Rucha talking about IT, but while we focus on equity all the time, the fact is that one of the most exciting asset classes has been gold through this year. Not for the last 2 weeks though. Gold has hit a 2-week low, and in fact Agam is with us to explain why. Yes, Agam.
Right, so in general, gold certainly has been trading near its life highs over the last couple of days. In fact, it's moved well above the mark of $2,500 an ounce, and it's been hanging around there. Now, while geopolitical tensions in West Asia, in Ukraine, in and several other a handful of parts of the world has been attributed to the rise in gold, it's also very curious that every time we see a correction in equity markets is when we start seeing a rise in gold. Sure, gold is certainly considered as a haven of security haven and a safe haven when it comes to turmoil across many regions. But today, perhaps this time is perhaps one of the few times where you actually have seen gold move in tandem with the equity markets across the globe. But I want to put this and juxtapose it against several other safe havens which are also considered. So while gold is one safe haven, the other one, of course, is US securities, and US securities denominated by gold. But what's been happening is, with the expectation of interest rates coming off, US yields, the 10-year yields have come off substantially as well. In fact, at the peak of 5% back in October of 2023, that was then, it has come off now to well below the mark of 4, somewhere around 3.8%. But what does this have to do with the US dollar? Well, the US dollar has fallen. In fact, what's really happening is that a lot of participants are now taking money off your 10-year yields, and they potentially are of the opinion that gold at this point in time serves as a better safe haven. And because of that, we've also actually seen a fall in the dollar index as well. So the dollar index has also come off from the peak of around 107. It's currently at about 100 mark as far as the index is concerned. So a lot of these funds have been withdrawn from US securities denoted by the fall in the US dollar, and has been put in gold. And that's also one of the many other crucial factors behind this up move that we've seen in gold coming through. Whether or not this continues is something that we're going to continue to keep an eye on. But for now, this precious metal certainly shines at a life high.
Thank you for that, Agam. So I don't think gold is going to lose its popularity or its luster anytime soon, at least in India. But back to equities, and let's tell you what's on NDTV Profits watch list this morning. Well, those with positive news, Adani Enterprises, they've talked about, or they've decided an early closure of the NCD issue because of the robust response they've got. KEC International has another set of orders, 1423 crores. Camlin Fine is going in for a fundraising via a rights issue. Dream Folks has a 600 outlet plan, but actually this is interesting because they're moving ahead of outlets at airports and railways to highways. So they will have food outlets now on 600 major highways. Akzo Nobel has started operation at a plant in Gwalior. Ashok Bilcon, their arm has monetized its Pune land. Basically, they've sold their Pune land, so that's some money coming in. Pidilite Industries, they have a pact with the Caltech Group for distribution. The Matrimony.com board has approved a buyback for 72 crores. Brigade has a QIB of 1.3 crore shares. So, and Imami has bought the first tranche of Helios Life. So a lot of corporate news there. On the downside, Venus Pipes, the DRI probe and for custom duty evasion will probably hurt the stock sentimentally, though the company has said they're cooperating with the authorities. And MedPlus Health has 2 suspension orders. A whole host of brokerage notes also might see some impact today. So important to talk about that as well. So let's just go to that. Let's just go to that list as well. So Bharat Forge would be one of them. Their North America Class 8 truck orders have come in, which are down 16% Y on Y. I would keep an eye on Bharat Forge. We can pull that stock up perhaps. SBI has a sell call from Goldman Sachs that could hurt it. I would add to that list an Indus Tower as well. So Indus Tower also has a downgrade to a sell from Goldman Sachs. The target price, in fact, has been dropped a fair bit from an earlier 434 to 350. And, of course, much below the current market price. And Vodafone Idea, I mean, I would be curious to see what the stock price reaction is, if any, because the Goldman Sachs target price is at 2.5 rupees for a stock which is currently at about $15. So that would be interesting to see. Mrs. Vector also has a QIP. So we've covered a large number of stocks which could react today. We'll see what happens when markets open. But meanwhile, what should be on your radar? Kush Bora joining us this morning, Sudeep Shah with us this morning as well, and we're speaking with Dharmesh Kant. Welcome to all of you, and thank you so much for speaking with us. Kush, let me start with you. On the indices, it's been not even blow hot, blow cold, completely lukewarm kind of a week. Do you see that trend continue?
Hi, first of all, very good morning to you and all the viewers. Well, it just might. It just might. But put it in context. 14 days of gains, 2 days of consolidation, not a bad picture, right? On the whole, I think what we'll take heart from, at least from a technical standpoint, is that even when the markets have closed low, and by that I mean Nifty yesterday and the Bank Nifty over the last 2 days, they've not breached the previous day's lows. Which means that there is some buying that is emerging at lower levels. Now, we know 25,000, 24,800 is a strong support zone. But we've also seen some writing at 25,200 put, which remains slightly in the money at the moment. So is there a possibility that we might perhaps see a rebound intraday? Perhaps remains to be seen how the options option writers behave once the markets open. But then there is that possibility that we could see a rebound, and also there's this buying interest at lower levels. Bank Nifty is slightly different, where we thought 51,500 may not be as stiff a resistance, but it's proving to be, where for the last 5 sessions it's not been able to close above it. So we've had days when it's gone past it, but it's not closing above that mark. So 51,000 remains a strong support zone. On both the indices, for the moment, view remains that you continue to hold your long position. For fresh buying, I think you could wait for some time. For Nifty, if you get any dip closer to let's say 25, 50 is when you perhaps go out and buy. Bank Nifty, I would say wait for 51,500 to be crossed, and that's when you get the momentum to buy. So no immediate action on these. Consolidation, has been a name of the game for the last 2 days. Seeing a Friday might continue today as well.
Sudeep, your call. Let's start with your index calls. Actually, consolidation is the name of the game. Any signs of life though in the Bank Nifty?
Here, I am just able to hear that other interview with Mr. Agarwal.
Okay. All right. We'll try and fix that audio for you, Sudeep. There seems to be some problem there. Dharmesh, can you hear me fine?
Yeah, good morning, Tamanna. Loud and clear.
Okay. Let me start with, how you are looking at IT companies today. And we've picked IT for a whole host of reasons. A couple of news stories there as well. Positive news flow. MS has a good note out on IT. And as we get into the Fed rate cut sort of season, do you think IT is a good bet?
As far as valuations are concerned, they are not cheap any longer. I mean, they are already at the top end of the valuation multiple, and for mean multiples, they are trading at +1 standard deviation. My own sense is people are trying to preempt the move in the IT companies, but the real picture will emerge only after the US election outcome. So that will decide how the discretionary spending and everything is going to take place. Not to forget that US government is already on a big side deficit as far as the revenue is concerned. So budgetary expansion, they want to take loans to carry forward the expansionary mode. So there are many macro things to be settled first before IT companies can see a real, windfall of for discretionary spending again increasing to the product forays which they have. So I have my own, doubts regarding the same, which we have been maintaining. And in fact, I would be very candid to say that we have missed the entire rally from the down to the up, which the IT companies have made. But structurally, I don't think things have, changed dramatically for Indian IT companies. Let's wait for, 15th or 20th of November, and then a more surer call can be taken. And the only point what I am reiterating this fact is that post that, if things turn out good for IT companies, it won't be a 10-20% kind of an up move. It would be a structural 3-year, a multiple cycle will come in. So nothing wrong in missing 10-15% if you are targeting 100% kind of a gain.
Okay, Sudeep, can you hear me now?
Yeah.
Okay.
Loud and clear.
Excellent. So, do you want to start with your pick straight up?
Yeah, why not? The first pick that I have is Amber Enterprise. Now, here in the stock, if you see the daily and weekly charts, the stock has been in an uptrend. But last 1 month, the stock was consolidating, and we have seen a decent breakout yesterday with volumes. So I feel that with the kind of sideways action that we are seeing in the markets overall, and a lot of mid caps now, just some kind of a distribution going on, this mid cap stock is just showing signs of a higher relative strength. So I feel this could be bought from a short term perspective with 4620 as a stop loss on the downside and 4800, 4850 as a targets on the upside. Now my second pick is Ashoka Buildcon. Now, this stock has been in an uptrend since March, so from 150, 160 levels till 217 July end. Post then, the stock slid into a period of consolidation with lower volumes now. So yesterday we have seen a magnificent rise of volumes, a good volume breakout here, as well as price action also breaking out of this entire consolidation. And now we feel that given the kind of structure that the stock is displaying, this could head up to 290, 298 levels in the next couple of weeks. Might not be an intraday trade or a trade for a day or two, but yes, from a positional perspective, this would be a very good stock to hold on. This could be bought with a stop loss of 259 on the downside and a target of 290 to 300 on the upside.
Okay. All right, we'll take a very short break. We're coming back with Kush's picks and, of course, a report on Ola Electric as well, where the anchor book unlocks today. So all that and more on the other side. Stay tuned.
Pre-open rates will be all over the place, but we'll try and figure out what happens. By the way, lots of things to watch out for. We've spoken about how Ola Electric could be in focus because of this, and we'll talk about it a bit later on. Metro Brands, there is a large trade that has happened. GMR Infra yesterday, there was a bulk deal that has happened, and talks of some very nice US-based hedge fund or fund coming into buy. So lots of stocks will be in focus purely on account of deals itself. The index itself likely to be very, very quiet. As Tamanna said before the break, we are bringing or focusing on IT for some very specific reasons. And while the macro hasn't changed, I think the notes that have come out seem to suggest, and Dharmesh's point is right, a lot of slip between the cup and the lip could happen. But for now, some people are saying that could there be some reversion to mean for select stocks which have been beaten down, the likes of Wipro, for example. I think it remains to be seen. Okay, let's try and talk about some of the stocks which had a very active day in trade yesterday. And there was Ease-My-Trip, which we will talk to a bit later on in the show. There was Gujarat Fluoro, there was KCP, and there was Kaplan Point, 3 or 4 names which had some very strong moves in trade yesterday. Let's talk about some of them. So Ease-My-Trip, Dharmesh, was up 10% yesterday because the company said they are getting into manufacturing of electric buses. Here's a travel and tourism company talking about getting into electric bus manufacturing. It may be a blue sky sector, but would you as a shareholder be okay with the company doing that, or would you take offense to it? Yesterday the street seemed to like it.
Precisely my point, Niraj. Good morning to you. I mean, they have no experience whatsoever in this segment of the business, and this segment is already crowded as of now. All automobile manufacturers, OEM manufacturers are already into electric buses manufacturing, be it Tata Motors, M&M. We have seen Eicher is there, but JBM Auto has come out in a big way, and Ola Electric is already there. So, I mean, Olectra, sorry, is already there. With this kind of a foray, market suggested something else. I mean, as far as shareholders' point are concerned, yesterday it was up dramatically. But my own sense is, I mean, I would take offense to that. So, not seeing it as a positive move at all.
Well, Dharmesh, we'll be getting the management at 9:20 a.m. So we'll try and ask him some of these things for sure. Kush, a word on Ease My Trip and, of course, your stock recommendations for the morning.
Sure. The stock's been in a massive downtrend, for some time now. Yesterday's move was a big one. But if I look at it from a medium-term perspective, there's a falling trendline resistance that, comes in at about that, 46, 47 kind of, zone. I wouldn't really be the first one to jump and buy despite the kind of move that we saw yesterday. 200-day moving average resistance also playing where the stock went past but closed below it. So don't be in a hurry to buy, at this first big break. Any move above this 47, 40, 46, 47 kind of zones perhaps will be, a confirmation of the near-term, uptrend continuing for some time. Yesterday perhaps might have been a blip, so it remains to be seen, how the stock behaves today. As far as my picks for the day go, two of them. Titan, seems to have turned a corner here. The stock has had its share of volatility on the way up as well. But, if you see yesterday and the last 3-4 sessions, the stock has done well on the back of very good volumes. So I think, that is one stock that you have to have on your radar now. 37.95, 38.70 are the targets. 36.50 is where you place your stop loss. Pharma names keep cropping up, every now and then. This time it's Bliss GVS that is, on our radar. Had a very sharp down move, in the last 2 weeks, but an equally sharp up move in the last 2 sessions, backed with very good volumes. 134, 135 is a bit of a resistance, but I think once that's taken out, 140 is where the stock would head to. 128 is where you place your stop loss.
Okay. All right. All eyes on the Ola Electric stock today, another stock that you should watch because the anchor investor lock-in opens today. The question, though, is will investors book profits or hold on to the stock? Now, Puneet joins us with more information. Puneet, it's an interesting question for the anchor investors as well, because the whole story about the Ola Electric IPO was how attractively it was priced in the first place.
Well, definitely, these first round of shares in the market are going to be very interesting to look at, especially, since we saw 100% run up in stock price and then a fall also from roughly around 157 odd levels is the all-time high for the company. Now, this is going to be, first round of selling. As we said, 18 crore shares will be in the market. This roughly represents about 4.08% of the total equity shares of about 441 odd crores. So it's a sizable lot that's going to be coming in the market. Currently, anchor investors will be allowed and eligible to sell roughly 50% of the total holdings that they got during the time of the IPO. So, if someone holds about 100 crore worth of shares, they'll be eligible to sell 50 crore shares in the particular market. Now, this, as we said, is the first round of selling. The next round is going to happen on November 8th, which is the 3-month ending period. So, that is when all anchor investors will be able to sell roughly all of their holdings at that time will be eligible to do so. Now, we just thought that we'll look at, how the last month has been for the company since the listing. Although the stock price has done very well, the sales numbers has been somewhat a key focus point. Vahan data suggests that came at around 27,000 for this particular month, down from 41,000 roughly in the previous month. Their market share has also gone down to 31% versus 46% at the end of June. So that's one of the key concern points really for Bhavesh Agarwal to answer. The other key thing is also that, year to date, although they have managed to retain their sales for financial year FY25 coming at roughly 1.8 lakh units. This is up from 1.06 lakhs, so roughly around 70% growth compared to last year. But this is also because of capacity coming on stream. So it'll be very interesting to see because the market is now crowded with multiple launches, especially in the cheaper EV space by Bajaj and TVS. So that's definitely a stock to watch out for this morning. Back to you.
Okay. Thank you for that. Dharmesh, I keen to know your view on Ola Electric. I mean, this is, I think, one of those stocks that have people who are very excited about it or very unexcited about it. Very few in the middle ground. Wondering what you think how about the performance that we could see today once there is this unlocking and anchor investors can actually exit.
Yeah, see, at the IPO stage, we were in the middle ground. We had a subscribed rating, and my sense was 1995 should be the fair valuation, giving it a benefit of expectation that they will be able to deliver the run rate and the path to profitability will be higher. But the type of run-up which came into the stock was quite surprising and amusing to me. So the reason being, see, M&M is they coming out there. You have a strong player like Hero MotoCorp already into electric segment. You have Ola, the other players like Bajaj coming out with a different version of gas-driven bike. So it's a very crowded and very, very competitive space. And their launching of electric by high-end, I have my own doubts. So it will take some more time, 2-3 years, to see how it shapes up. Even if it shapes up, then 1995 is a good valuation price for this based on next 3 or 4 years of earning expectation. So I think it will come down to that level and stabilize there. So 10-15% more kind of a stock price correction is what is likely to be there for Ola Electric next 2 to 3 months time frame.
Okay. Well, Ola Electric 3.5% down for now. Let's just wait and watch how it shapes up during the course of the day. Okay, Sudeep, the trades in banks particularly have been anything but good. I'm trying to understand, is there a trade that exists currently on a Friday morning for an HDFC bank or an ICICI bank or a Kotak bank? We've just stopped talking about them because really there's just nothing happening there. But is there a trade there?
Good morning, Niraj. Niraj, if you see here, if you take the case of HDFC Bank now from 9th of July, to almost we are now 2 months into that cycle, the stock has been in a range between 1660, 1665 and 1610 on the downside. So a 2.5% range for a stock like HDFC Bank is not seen many times in the past. So I feel, yes, there could be some move around the corner. The Bank Nifty is just waiting for some triggers, and that probably could be that the most anticipated Fed meet and ahead of which this range-bound action could still continue. So as of now, no trade exists in HDFC Bank. There could be a trade only if the stock moves or closes above 1660, 1665. From a positional perspective, till then it's just 1.5% move here and there. But if you come to ICICI Bank now, here this stock is kind of more interesting than HDFC Bank because the relative strength here is much higher. And in the last, say from 14th of August till 3rd of September, the stock has already moved 7 to 8%, whereas HDFC Bank was in a 1 to 2% range. So here, there could be some buy on dips case if we have to compare between ICICI and HDFC Bank. Yes, ICICI Bank is a buy on dip till it holds above this 1210 mark, which is the 20-day exponential moving average. And we could still see some consolidation here. But from a medium-term investing or a trading perspective, ICICI definitely tops the list ahead of HDFC Bank.
Well, that's iBank. That's been a street favorite in the private banking space. HDFC, of course, not being able to play catch up on that. There'll be stocks like Vodafone Idea that I'd like to see what happens. In some ways, you've had an upgrade coming in from Goldman, where it's a sell, but the price target has been increased. You've also got stocks like Bharat Forge to watch out for in terms of Class 8 truck numbers that have come in. Monthly numbers are up. Yearly numbers are down, 16% down YOY for Bharat Forge's numbers. Well, Harsh is standing by with a quick update on what the big brokerages have on their list today. Harsh, what do we have?
Well, we have Bajaj Finance. Jeffrey is constructive on this one. They've hiked their target price from sub 8,000 to 8,410, which is a solid 16% odd upside from here. What they seem to be suggesting here is that they've met with management and bounce rates seem to be falling, which is an indication that possibly going forward, your credit costs may start to come off. Bounce rates typically indicate that EMIs are getting paid at an accelerated pace versus what they were being paid in Q1, and therefore that's a key positive for Bajaj Finance. Credit costs likely to come off, but on the flip side, they are also suggesting that growth may come off because Bajaj Finance is being cautious with regard to its lending. Now, in terms of the growth expectation, they're still keeping the expectations at 25 to 26%, but they believe that the moderating credit cost should aid profitability going forward. They're expecting profitability to bounce back in second half of FY25, and by profitability to bounce back, I mean the impact of credit costs on profitability should get better in H2 of FY25. So they're seeing that flip. In terms of valuations, they've hiked the target price. The multiple remains 4.5 times September 2026 price to book valuations, 8410 being the target price.
Right, thank you for that. That's the call coming on Bajaj Finance. Jeffries on the stock. The stock is looking like it could have a decent morning in trade. Well, Kush, a couple of more counters to highlight, which could be the big movers today in the broader marketplace. It's KEC that gets a big order. Ashok Bilkon has also managed to get a strong order. You've had, I'm not sure why, GM Fodl, of course, on back of news that we had last week, is doing okay. And Prestige Estate has completed their QIP. Those four counters, anything that makes good or looks good for an intraday trade?
I think KEC, despite the kind of up move that we are looking at, could continue the momentum. I'm not entirely sure if it's the upper circuit on opening, then perhaps you'll have to wait for some more time. Other than that, Prestige Estate, it's at a good support zone where you've got 70, 1800 kind of levels acting as a good support zone. So an opening above that could push the stock higher to 1850, 1880 kind of levels. So, if you do want to catch a trade, then perhaps, Prestige Estates, would still make the cut.
Okay, let's talk a bit about Angel One. Sudeep, just want to know your view. The business updates are looking good. The pre-open session also was pretty positive for Angel One. Is this something that you would take a bet on for today's trade?
Angel One, if we see, it was in a downtrend from the January, from the stock from the highs of 3,800 had cooled off to 2,000 levels. But towards the mid part of August, we saw a good spike up here from 2,000 to almost 2,800 thereabouts. And then the stock has slid into a period of consolidation with lower volumes. However, despite this, in the last 10-15 days when it was consolidating, it is still holding its 20-day exponential moving average, and the volumes are on a softer side. So from here, I feel if this zone of 2450, 2460, which is the 20-day exponential moving average holds, we could see some surprise on the upside, probably up to 2700, 2750 levels in the coming few sessions.
Okay, Sudeep, we'll let you go on that note. Thanks so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time. About 8 seconds left for the markets to kickstart trade. You would be looking at a flatline market maybe for the course of the day ahead of the non-farm payrolls data. It's really being touted as a very big number, but for now, we're starting off flat as well. Banks, in fact, at 34% in the red. So much unlike yesterday, banks are not quite doing as well relative to the Nifty. Nifty IT is the other one because Nasdaq had a bit of a okay move, marginally in the green. Okay, let's get the heat map up on the screen and show you what's moving and what's not. A lot of red. SBI correcting on account of the Goldman Sachs downgrade, but the other banks like ICICI Bank also looking slightly wobbly today. Hindalco correcting yet another day. HCL Tech on account of the Morgan Stanley downgrade, probably down in trade. Titan, after having a really good day yesterday, is also in the red. What's in the green though is the question. LTI Mindtree, the Morgan Stanley upgrade working for this one. 2% higher for that one. Bajaj Finance, presumably on account of the Jeffries upgrade. IndusInd Bank, Power Grid, ONGC. So it's really as if brokerages are determining the fate of the Nifty 50 stocks today. Frankly, not too much of a news flow in most of them, with IT led by LTI Mindtree, TCS Wipro in the green, and SBI and ICICI Bank looking slightly weak.
Yep. It is about brokerage notes, and even in the broader markets, you'll see some impact there as well. Let me just pull up very quickly, though, what the broader markets are doing. On this Friday morning, nothing much, frankly. TGIF moved there mildly in the green on the mid-cap, small-cap stock still. And that trend continues. The small-cap index has been relatively a better performer most of this week, or at least the last couple of sessions, 0.5% up in trade right now as well. All right, Goldman Sachs calls, sell calls on Vodafone and Indus Tower. Let's start by seeing how both those stocks are faring. The Vodafone target price was the sort of astonishing one because their target price is $2.50. The stock down 4% right now in opening trade. There's a sell call on Indus Tower and on State Bank of India as well. So all three in the red. That impact can be seen. KEC International has won orders worth 1,423 crores. That stock up 4.5%. Prestige has raised 5,000 crore rupees in a QIP, and you're seeing a bit of an upswing in that stock. More action in the pre-open session, to be honest, but Prestige doing okay. Angel One has pretty good business updates for the month of August, and that stock in the green as of now. VA Tech Wabag is the other one that I want to highlight for you. 5% up in opening session. They have 2,700 crore rupees worth of orders from the Saudi Arabia Water Authority, and that stock up on news. So a mix of news flow and, of course, brokerage calls determining who are the winners this morning, Samina.
It's a quiet morning. The Nifty 500 pretty much in snooze zone for now. Trading flat. You've got a bunch of movers and they're coming in on back of order wins, at least in the broader marketplace. So Tamanna's already highlighted KC for you. That is your big one in trade this morning. They've bagged a significant order. The order book now 11,000 crores. So 1,400 crore win has actually, or rather would significantly impact the order book. They've seen a 75% growth as well in terms of orders in the last 1 year. Well, Aavas Financiers has come out of nowhere. I'm not sure what the news point here is, but the stock is up 4% as we see it. Financials aren't doing too badly, and I'm not talking about banks. I'm talking about wealth advisors in that sense and brokerages. Motilal Oswal is seeing an up move of 4%. You've also got, along with that, IIFL Finance that's up 3.5%. You've got 360, which also should be seeing an uptick in trade. So all your equity market ancillaries are trading in positive territory this morning. Well, a quick check on how Campus Active is doing well. Anything to do with crude has a good day. So Castrol trades firm this morning with the marginal uptake as compared to the rest of the market. This one is up 2.5% on back of lower crude prices. Let's take a look at Gulf Oil. Okay, Gulf Oil trades flat. Paint companies, while we're at it, let's see if there's a reaction this morning on any of those counters. Berger, Indigo Paints are some of the names that are worth mentioning. Trading higher. So they're doing much better than the rest of the market, at least in terms of trade. Vartech is looking good. Vodafone is taking into the chin that GS called report has not done well for the stock. The counter sees a 5% downtick. Indus Tower also sees a 2% downtick. Indigo Paints, I believe, has had a block deal that's just hit the market right now. So that could be a reason why you're seeing a little bit of pressure on Indigo Paint, 4.5% on a block deal that hit the markets just a few seconds ago. So that's Indigo Paint for you. On the sell side, apart from Indigo Paint, let's take a check of what else is moving lower. You've got Raymond Lifestyle. After a good listing yesterday, nearly 100% listing again yesterday, the stock is seeing some profit taking, up down about 5% in trade. You've also got Godrej Consumers down 2.5%, Garden Reach, Mazgaon Docks, all your shipyard and defense companies that have had a good week for most part of this week are seeing profits being taken off the table. Kush, quick one. Anything identified in the first few minutes of trade on the long or short side?
So, slightly mixed bag in the sense that, Titan had a softish start, but, it's recovering rather well, and it's holding above the 3,700 mark. So this was our call, in the morning with targets of 37.95, 38.70, 36.50 being the stop loss, that's still intact. Bliss GVS, again, on the positive side, but soft. Both of these are still very much active. I think more than anything else, I'd like to reiterate, the Shriram Piston call that we've been discussing, and yesterday also as a part of, the BTSC idea, we discussed it around the 2,200 mark, has had a solid start. It's maintaining this for a target of 2,300 and, higher levels, someone if he wants to enter. From a trading perspective, you can, although we still believe that, this stock has, a much higher or a much longer way to go.
Okay. Dharmesh, Anything from the results that has stood out for you that we haven't discussed today that you want to maybe just give us an insight into?
Yeah. I mean, a couple of stocks are there which look very interesting in the current market juncture and the way the earnings pattern has panned out for them. Both are from the pharma space. I mean, one is from the hospital chains, Narayana Hrudayalaya. I think the management has become aggressive now. They are outlaying capex for capacity expansion in different geographies. And if you compare this with other hospital chains, they are pretty cheap even at current levels. So our call is from a long-term horizon SIP method of investing. We are seeing it a doubler. 2100 is the target price based on 2 years forward earnings. And the next one is Natco Pharma. So this is again mid-cap company, particularly into fixed dosage formulation business. Around 76% of it is exported. It's one of the top 3 oncology players in India, and again very cheap. If you look at operating margins, pretty high operating margins. Valuation multiples are quite cheap. It's available at 15-16 kind of a PE multiple with an ROE in excess of 25. We expect 20% profit CAGR for this company. So these two are the stocks which I think, based on the present market texture, is a good SIP method of investing, and expect almost 30 to 40% gain on Natco Pharma from a year's perspective, and 2 and 3 years if you are willing to wait. Narayana Hrudayalaya around 2100 is a price target which we are expecting for the same.
Dharmesh, Kush, so good having you, both of you. Thank you so much for taking the time out.
Thank you so much.
And have a great weekend. Minchami Dukaran to both of you. Happy Ganesh Chaturthi to both of you. Let's get in Manoj Soni, CEO of EV and Mobility at Ease My Trip, for the announcement that they did yesterday. Manoj, good having you. Thanks for taking the time out. Let's first start with, because I'm guessing that as the CEO of this division at Ease My Trip, you probably have prior experience in this space, which is why you've been brought in.
Right.
But it's a crowded pocket, right, Manoj? I mean, how does a quote unquote a startup make its mark when there are behemoths already operating?
So in this space, there is, anyways, it's already on a growth trajectory. We see that year on a year, I mean, the CAGR was expected around 24% into this. By 2030-35, I'm pretty sure that there would be a huge demand of around more than 100,000 odd buses. So there is a space available. And we come from the experience segment from the same industry, and that's how there is a potential, and we are entering into this venture.
Manoj, just tell us a bit, because the question yesterday in everybody's mind was, what capability does Ease My Trip as a business have to launch something like this? Because they're a travel portal. I'm guessing you bring that experience. Just tell us a bit about you and the team that is setting this up for Ease My Trip.
So to start with, Ease My Trip, as we all know, have a very rich experience into B2C e-com sector domain. We already have a subsidiary called YOLO Bus, which is an Ease My Trip subsidiary, which is already operating in 250 routes in India. Coming to your question, I personally I have 24 years of experience, and I am from this background. Only I'm ex-Ashok Leyland and Electra as well. So the team also, the R&D team and all the team, those who are working back end into this, they are also having a rich experience, and we are building a very great product, which I'm sure in coming time we will see and we will experience that.
Manoj, hi, it's also Samina joining in. The most important question, I guess, is how do you plan to fund this expansion? I know your company is almost debt-free, so extremely healthy on debt equity. But these are big plans, and this is an upfront investment, I'm guessing, that you would be making into this forward integration that you're looking to do. Where is the money coming from?
So initially, board has approved 200 crores for the initial proto R&D and plant setup. Going forward, that investment would be utilized in coming 2 to 3 years. Going forward, when we expand, when we initiate the production and all, company is already into funding rounds with investors. That I'm sure that would be sorted out.
100 crores initial that is going to be upfronted will be coming in from internal accruals, Manoj?
That's an internal approval, yes. That would be.
And maybe a quarter out to QIP is what could potentially happen?
So
if you have big plans, you don't have much of a choice.
Yes, we do have a big plan, and we are aggressive about it. We are very much confident, and it was not the decision which was made in a very hasty this thing. We had a very long round of discussion. When our playbook was ready, we hit the roads, and now we are here.
Manoj, how will you look at integrating this? Will this only be for Ease My Trip customers who book through your platform? Will this be available to other platforms?
It's the traditional manufacturing business, which would be open for all, which would be for India market, as well as we are also exploring the international markets as well. The product would be, capable enough.
This turn revenue accretive, because I'm assuming the investments come in now. It could be at least a few months out, if not longer.
Sorry?
I said, when will this turn revenue accretive for you? I'm assuming it's still a few months out if you're just setting up the facility for now.
Yeah, so currently we are in a phase of setting up the facility and creating the infrastructure and all. So we would have our product on road in 2025, and from there we would be hitting the complete revenue booking and all.
Manoj, I'm just going to snowball this for you because I don't have a sense of this, but given the business it is in, one, where are you looking to set up this facility? And in the last couple of weeks as well, the PLI approvals have gone up. Would you consider applying for a PLI?
Yes, we would be considering applying for PLI. As of now, we have, taken a plot around Gurgaon where we would be setting up the infrastructure and everything.
This plant, Manoj?
Yeah. Plant would be in Gurgaon, and we are also in discussion for the expansion of other things.
Okay. I just have one more question, and which is from the what are the timelines, Manoj? I mean, when do you've applied for this? You might apply a PLI, etc. When do the first of the products come off the block? And are there internal targets for? Sorry, my second part of my question is: are there internal targets for how does the revenue stream look like? Let's say in FY26, and then let's say maybe in FY29 or FY30.
So we.
Sorry, I think we've lost him. Sorry, Manoj, could you start from that answer again? We just lost you for a brief bit.
Hello, am I audible?
You're audible now, please.
Sorry, internet connection. So yes, the plans are big. We are expecting our first proto and first build vehicle to be out in 2025. From there, the full-scale production will start and the growth trajectory would be set. I believe we all will see the financials and balance sheet next year onwards when we start booking the revenues and other things.
Some internal targets, Manoj. I'm not asking for a ballpark number, but you mentioned that the big plans. There's some internal targets about what the numbers could look like, let's say.
So in first year probably, after the production starts, the first year is something which we are expecting to be around 500 crores revenue, and from there by 2030, I'm very much sure it would be close to around 5,000 or 6,000 crores business.
Of top line from this electric bus business alone.
Yes.
Wow.
Yes.
Okay. Well, Manoj, we wish you all the best for this and more. Thanks so much for taking the time out and being with us today.
Thanks a lot. Thanks for having me.
Well, so two questions answered by Manoj Soni. One, the question marks were whether Ease My Trip has the capability or no. There is also a step-down subsidiary that they have, and Manoj and team come Manoj himself said that he's ex-Electra and ex-Ashok Leyland, if I'm not wrong. So, in some sense, brings some experience out there.
Yeah.
Very tall plans, but hyper-competitive space, so it's going to be difficult for sure.
And they have also international plans. And of course, the fact remains that they are putting in a 200 crore rupee investment in this to begin with. They're seeking a PLI, and also they may be looking at a QIP a few months down the line as they look to make this a bigger and grow this business in a bigger way. Well, that's what we have. A quick check on a couple of stocks that are moving in trade. We have Vodafone that's taking it to the chin. That GS note is what's probably putting pressure on the counter. The stock is seeing a 7% downtick now. A few more that are looking weak. So you've got a whole bunch of counters. Raymond Lifestyle, like I said, is down 5%. Indigo Paints, GNMG and MDC are some of the other big losers. But on the big conversation for today, if I can just quickly... SBI's top boss says that the bank will focus on customer service for deposit growth. C.S. Shetty, in a candid interview with my colleague Vishwanathan Nair, says that the 3-year agenda is to, of course, grow the deposits. Let's hear him out as he talks about his 3-year agenda and discusses his future plans for SBI Bank.
We are here not on account of speed, but on account of direction and intent. The right direction, right intent is something what brought us here in terms of the size, in terms of the positioning. So that philosophy of pursuing those objectives will remain. I think that's the first thing I would like to say. But the strategies in terms of what needs to be done on the business, in terms of our strategic directions, in terms of technology, what I intend to do is that in the last 3 to 4 years, we built a strong balance sheet. We have invested significantly in the technology and digitalization. Now we have to leverage on that. The leverage is of two kinds, in the sense that, we have unparalleled branch presence, ATMs, business correspondents. And how do I marry this technology and digital to reach across the channels and increase the productivity would be my first priority. The productivity gains on account of the technology investments would be the focus. So the second feature would be that we have been secularly growing. While we had a large retail growth for a couple of years, and when corporate credit growth was not happening, today if you see retail, personal, MSME, agriculture, corporate, almost having a double-digit growth. That means my focus on a particular segment is not there now. I need to grow in all the segments, and I have the potential to grow. But among them, if I have to take out, and I see that there's a good amount of income potential, earning potential in the MSME now, today. Okay. And we believe that the kind of data set what is available in terms of GST, in terms of our own account statement, analytics, the MSME lending is much more confidently we can lend to the MSMEs than what we were doing earlier. Right. So the focus would be on the business front. These are the areas which we are going to do. And for all these things, the central agenda would be the technology and digitalization. As you know, 2.0 also is going to be something which is going to be available during this period. Right. And which is going to completely transform the customer experience across the channels, omni-channel experience. So if I have to, my answer sum up, these are some of the things, but I think there are a lot of elements which go into it, to achieve these objectives. Okay. I'm not getting into the numbers. Obviously, the numbers, you will definitely come to that numbers later. I'll answer them.
Okay. Let me break this up now entirely. You've got a massive loan book, right? And equally massive deposit. In fact, your deposit book is larger than the loan book currently. As a lender who's currently looking at the macro environment as well as the environment in the banking sector, growing a big book like yours in a extremely competitive sort of landscape, whether it be liabilities or assets, how do you think that will go by in the next 3 years?
Yeah, one thing what at the management level we decided, and even the board level we have decided that our growth will not come at any cost. If I said in some context also that if I'm fighting for deposits or competing for deposits, I would compete on non-rate war. I don't want to get into the rate contest.
Yeah,
I would like to improve the service quality.
Look.
And our customer base is huge, and some of them probably not happy with some of the services. How do we bring them back? We have identified the whole universe of our customers who are the promoters who are promoting our services. Their SBI is good, you please bank with SBI. Okay. And then we have stagnant customers. That means, they have an account but have not been transacting, we would like to reach out to them and ask them what makes you to come back. And there are attritors, they're leaving. Some of them probably are leaving for some reason. We would like to find out, what are those reasons which are making them to leave. In the sense that our effort would be to fight on non-rate, contest, not on the rate war.
Okay.
So is the case with on the credit. When you talk about credit, the credit growth we would like to do without compromising on underwriting standards. I think this is something which we hard fought and established very, very strong underwriting standards today. And there is no way we can compromise on that. And even if the book grows a little slower, it's fine with us.
Okay, fair enough. Coming within the lending ecosystem, two major parts. You've got a non-wholesale and a wholesale piece. Within the non-wholesale piece, you've got retail, you've got MSME as one of the focus areas, as you mentioned. I want to touch upon retail and then come to MSME. First, retail, extremely competitive. Unsecured, not so exciting for lenders at this point in time after the Reserve Bank of India raised some concerns. And of course, you are seeing some amount of slippages on that side as well. You in the sense, I'm saying the banking system has been so much. To your mind, what is retail growth looking like for SBI, for the ecosystem? Do you think that maybe the times of that extremely 30%, 35% growth is sort of behind us?
Yeah. I think the CAGR of 30-35% what we witnessed may not happen for two reasons. I think there was some pent-up demand which had resulted in that kind of growth.
Yeah.
Obviously, it will moderate over a period of time. And the RBI measures also definitely have impacted the unsecured loan growth rates. But in our book, if I have to talk about SBI, as we keep on saying that, there are unsecured loans and there are unsecured loans of SBI.
Okay.
So our policy would be that how do we strengthen and expand the user base? We don't want to give unsecured loan to the same person.
Correct.
So we have a significant number of salary package account customers who have not taken this unsecured loan yet. So we would like to reach out to them.
Okay.
And I think our potential is there. I'm not saying that we would be witnessing 30 to 35% growth rates what we've had earlier. Obviously, to cover on the additional risk weights, we may have to increase the rates. Some amount of rate increase probably would happen in the unsecured loan space. But our effort would be to get the best quality customers into our books.
That's the unsecured piece. Now, on the secured side, under your predecessor, the focus on the home loan has come back, pushing that product as one of the major drivers of your retail book. Where does that go from here on? Because the reason I'm saying this is because hopefully the rate cycle is going to turn. So there is an expectation that the demand is going to pick up again. And home loans.
The demand is still there. I think we are doing, the run rate is very good on the home loans. And I don't think there is any concern in terms of the home loan growth rate. I think that is one product which is doing extremely well in our books. And we'll continue to do that. And today we have the largest number of processing centers across the country, home loans. I don't think anybody else has got so many processing centers, which has reduced the turnaround time. Today we are able to give a home loan in 5 days. Okay. So we are not only competing, yes, our rates are customer friendly, competitive rates, but beyond that rates, we are also providing the excellent customer service. We are one of the most trusted home loan provider in the country. We do extreme due diligence on the builder and the paperwork. And these are also some of the USPs which are not visible to anyone. Yeah. But people would like to take home loan from SBI because of the due diligence which we do. And we protect the customer interest when they are buying the property. So I think that home loan book and the secured retail personal portfolio, I think that will continue to grow. That will be one of the flagship products for us.
A flagship product. Coming to the other focus area that you mentioned about MSME, what took bankers so long to realize that, okay, this is a growth area? Because, there was about 10 odd years of corporate credit growth, which then translated into retail credit growth. Now, finally, lenders, especially some size of SBI, is talking about MSME as a potential growth area. What is it that kept lenders out of the ecosystem so far? And what is it that you're seeing at this point in time has changed for you to enter?
See, we have been traditionally lenders to the MSMEs.
Yeah.
While the growth rates have been impacted, we were always the largest lender to the MSME. Even in the worst times, I think our MSME book was largest in the industry. The growth rate was lower. Essentially, I think some of the factors which had impacted MSMEs, where, we were dependent on the large corporates, and when the large corporates got into trouble.
Correct.
Obviously, they also had staples, and they didn't have the bandwidth to, handle the issues which they have come out with. That made the growth rate slow down, and even the absorption by the MSMEs itself has come down. But today, I think MSMEs are also doing well, as the corporates are doing well.
Okay.
Number one. Number two, my ability to assess the needs of the MSMEs in a holistic manner, without depending on the piece of paper what MSME is giving to me, a balance sheet or a P&L. I have a host of data which is available. Whether it could be bureau data, it could be a GSTN data, or my own internal account data, which I'm able to triangulate and tell them that this is the loan limit which is available to you. So my ability to assess MSMEs, not the medium-sized entities, but mainly the small size, up to 5 crores. Today, up to 5 crores, we have completely, assessment is moved to a business rule engine based.
Okay.
That means, if a customer comes and gives his PAN card, I don't need any paper, just PAN card. In 15 minutes, I will be able to tell him up to 5 crore rupees whether what is the loan amount which he is going to get. So I think this confidence is what is somehow driving everyone, not necessarily SBI. I think the whole system is growing at 20%.
Correct.
So the confidence level on the governance part and in terms of the data quality part has improved on the MSMEs, which is making the lenders to definitely go on. And the second important element which is also contributed is CGT MSC guarantees available up to 5 crores.
Okay.
Which is a good development.
Okay. So for the bankers, there's that amount of confidence for those smaller loans. Got it. Let me touch on the wholesale piece now. Private capex has been making a comeback for 3 years. Finally, seems like it's here. There is some amount of rejuvenation within the corporate segment. In fact, we had the RBI governor just talk about the fact that companies need to start coming in and really needs to start spending. As a lender who's active in this space and is probably going to lead the charge as far as private borrowing is concerned, how do you manage that growth without compromising on risk, without compromising on any kind of pricing issues? Because pricing has been a big talking point as far as corporate lending is concerned.
No, I think these two things I already told you that we have set up underwriting standards, whether it is a retail, whether it is MSME, whether it is agriculture or corporate. I think our underwriting standards, we are not going to compromise. When I say underwriting, it's not about the paperwork. It's about the way we assess the project. For example, maybe, a few years ago, if a road project is there, we were trusting that the land will be available, right of way will be available. And even with 50% right of way, probably we were giving the money. Today, our underwriting standard says that unless 95% right of way is available, not even 1 rupee is given to them.
Okay.
Which means that our and the whole ecosystem also has changed, and the quality of equity has changed, and the promoters are willing to bring the upfront equity available in the form of private equity or their own cash accruals, which they were able to make in the last 2-3 years. That means the upfront equity is available. And we are insisting that, whatever statutory approvals are required, the statutory acquisition of land is required, that needs to be in place. So which gives us confidence that, the kind of cycle which we have seen will not happen now. That is on the underwriting side.
Okay.
On the pricing side, I certainly believe that I think the risk is not being priced properly in the corporate side.
Even today.
Okay. And we don't want to get into that situation. I personally believe that project finance, where the risk of execution are there, that execution risks have to be properly priced.
Yeah.
Once the execution risk is over, it can move into a securitization deal where the pricing can be a market-related pricing. I think it is important for all of us, lenders, particularly in the corporate banking and project financing, to realize that the execution risks have to be priced properly. And we are not compromising on that.
But doesn't that make it difficult to grow?
I think people also come to us because of our ability to assess a project.
So it's not just
price a project. It is not about pricing alone. Yeah, once the execution is completed, obviously the price war starts, and so they go around shopping. But as far as project financing have been issue, I think it's still SBI is a preferred bank.
Right, okay. You can of course hear the full conversation on our television channel a bit later on in the day. You'll of course hear the whole conversation on all of our social media handles as well, so keep that in mind. By the way, I wonder if the discovered price of the issue today is here. Baazar Style is out. It's 9:47, so we should have it. Maybe we'll try and get that going in a moment from now. But Baazar Style should be something that you want to keep an eye out for as well on listing. In a moment, maybe in 3 minutes, we'll get there. But by the way, the other one stock in focus is matrimony.com. They've approved the buyback, 72 crore buyback at 1,025. Acceptance ratio about 3.15%. Only if the buyback is fully subscribed for, of course. Sushant Pai, if I'm not wrong, it's Sushant Pai, Chief Financial Officer of matrimony.com, joins us on the show. Sushant, thanks so much for joining in. I believe I'm calling out name correctly. It's Sushant Pai, right?
Yes, you got it right.
Perfect. Thank you so much, Sushant. Good having you. Thanks for taking the time out. At the onset, happy festivities to you and everybody at Matrimony. But just tell us a bit about the buyback. Is it being done to kind of take advantage before the window closes, or is this symbolic in nature? Because it's not a very large buyback per se.
Yeah. So firstly, thank you for having me here, and good morning to all the viewers, and happy festivities as well. So first, this is our second buyback. We did the first buyback in 2022. It is a form of a capital allocation policy. It is a form of returning to the shareholders, and there are different forms. So this is one form of it, right? So the second thing is, I think our company is a profitable company. It's a debt-free company. We are a cash-generating company. So we have about, as of 30th June, we had about 382 crores of cash. So from that perspective, it makes sense. And therefore, buyback has to be seen from that perspective in terms of what we perceive as the value for matrimony.com. The second thing on the shareholder bit, right, there's a little bit of a technicality there. I'll just speak about it. See, you can do up to 25% of the net worth, as buyback. Our net worth is about 288 crores. So we have done the maximum in terms of buyback, and the board has approved at a price of 1,025. However, since it crosses a particular threshold and it's up to 25%, this also requires shareholders' approval, and that which we will put forth to the shareholders soon. So from a tax perspective, since this buyback will be concluded only after 1st October 2024, the tax incidence will be by the shareholder and not, by the company. So the tax will be borne by the shareholder. However, I think the shareholders have to look at their own tax brackets, look at their own, tax laws, because I think different entities have different types of tax. For example, a resident shareholder would have a different type of tax. Institutions, they manage money on behalf of someone else, so they may have a different view on all of this. So they need to take into account their entities and then figure out their tax. But for us, I think strategy overrides the tax. That's the way I see it. So for us, if it makes sense to do a buyback, and tax is only an eventuality out of it. So for us, it makes sense to do a buyback, and that's why we wanted to do the full maximum amount of buyback by taking shareholders' approval. And I think the price is also at a very fair price. Since the price has also had over the last couple of months to 3 months. So if you look at the volume weighted average price over 3 months, it's a good premium of about close to 60%. Right. So that's the way to look at this whole buyback snap.
Okay, thanks. Now we have about 7 odd minutes. I would love to understand about the business as well. Q1, Sushant, you yourself had been not quite up to the mark, and When I look at what's happened, let's say for the last 2-3 years, right? The 3-year revenue CAGR is what, about 7-8% or 9%, right? If I'm not wrong. Margins were above the teens. Now they are mid-teens currently. What's happening with the business? Is this? Do you expect some changes to happen in the near term? Please fill us in.
See, the matchmaking business, right, is highly competitive in nature. There is a lot of competition in the north. We are leading in the south. So it has to be seen in the context of the industry as well. So what we are doing is, obviously, this is not a business that will grow high double digits and so forth because of the nature of the business as well. So therefore, what we are doing is that to look at all avenues to make sure that non-customers come into our foray. And that's what we are looking at. So for example, if you look at in November 2021, we started something called Jodi in the vernacular language play into 9 vernacular languages. That is more for non-graduates, right? So the point I'm trying to make is that this business requires a lot of innovation day in, day out, be it product features, be it the way you price it, segmentation, and we have to do all what it takes for the growth. So it's a daily business. It's a consumer internet space, right? So our view is that we have to go on bringing newer segments into the foray, and Jodi is one example. So earlier we were tackling, the mid segment through Bharat Matrimony or community matrimony. We also had the elite and personalized services like assisted. And with Jodi coming into play, we have sort of completed the entire pyramid. So continuously we're looking at avenues. Q1, what happened is this year had an unusual number of inauspicious days as compared to Q1 of last year. So therefore, after many quarters, actually, or many years, we first, after a long time, I think we had a decline in Q1. As we see the business, we are looking at various growth levers. We believe that Q2 is also a little muted quarter. It is expected to be a muted quarter, but however, we believe Q3 onwards, we expect a bounce back to happen from Q3 because of the various initiatives also that we are taking. As we speak, we've also launched, in 2 markets, Tamil and Kerala markets.
Sushant, I'm sorry, but I have 4 minutes, so I'm going to try and make it a bit of a rapid fire. And maybe we'll have a longer conversation later. So you expect Q3 onwards things to pick up. I hear that it's a very busy wedding period until May, once the wedding season starts as well. Does that have a direct impact, and therefore could FY25 numbers look better than the 8-9% average they've clocked in the last 3 years?
No, I don't think so, because Q1 has been a muted one, Q2 is looking muted, and therefore Q4 is traditionally a strong quarter for us. So I don't think we'll be in that sort of a range. But we will see as it progresses, how we'll do, and we want to do better as we go along. But I don't think we will reach that sort of a range this year.
Okay. Thanks for the candor. The other piece is you cutting down on advertisement expense as well. Is this a
short answer is we are at a very good threshold level of marketing, right? We have spent about 46-47 crores, and we are covering all segments. I think that's good for us. Competition intensity has also reduced in certain pockets. So given all of that, I think we are in a comfortable space in marketing. And therefore, if you exclude marketing, our gross margins are very good. And with that, we hope that margins also will show some improvement as we go along in the year.
Okay, but maybe post Q3, once you said that business starts looking up a bit.
Yes.
Okay, great. You are exploring new business segments, I believe, beyond matrimony. So what would these be? And 2, what's the rationale for doing this?
Yeah, so the rationale is basically to take advantage of a consumer internet brand. The decades of experience that we have had, we've been here, we are just entering our 25th year. So to take care of all of those things. And the rationale is our MOA is very, very narrow. So we wanted to make it a little more, broad, and we have taken an enabling resolution and the shareholders have approved it. What businesses will start will be a board subject. As and when we deliberate with the board, we will announce to the market if there is anything that is in the pipeline. But this was a more like an enabling resolution, and we will table it as and when we go along.
Oh, sorry. So am I understanding that you've made it an enabling resolution, but there's nothing which is decided or on the anvil about a foray into other products as of now, beyond matrimony?
Yeah, so we are thinking of a couple of things, but as and when it comes, we will announce. So right now, there is nothing to announce.
And funding
because it has to be deliberated by the board as well.
Got it. Okay, which is fine. But funding won't be an issue because I presume you're sitting on a large pool of cash any which ways. Even post the buyback, I believe the cash on hand would be fairly substantial.
Yes, we'll still be about 300 crores even after the buyback cost. And these businesses, even if we enter into these businesses, these are not capital intensive or people intensive in nature. These are all certain product plays, right? So I think we'll have a frugal investment discipline as well, even if we enter new segments.
Yeah, fair, for sure. One statistic, Sushant, and that's my last question really. One statistic that I really wanted to understand, and correct me if I'm wrong, of course. You added, about over 2.5 lakh paid subscribers, right? But the average transaction value for matchmaking remained flat. I mean, why is that the case? Is there a price downtick that has happened due to competition? What has gone behind this?
See, that's our segmentation strategy. Like I told you, right, that Jodi, for example, is priced as low as 1,000 rupees. And Elite would be priced as high as 50,000 rupees. So if the mix changes, the product things also changes. So it's a segmentation strategy. Within various communities, within various segments, we price it differently. And depending on the proportion of the various products, the price changes. So it's a conscious call on how we price it.
Okay, so just extending my last question before we wrap up. Could it happen, Sushant, that your number of subscribers and the paid subscriptions move up? And you might be wanting that to happen even if it comes at a lower revenue per user to you. Could that happen over the course of the next 9 to 18 months?
Yeah, so I think our ATV would be very range bound. I don't think there'll be a significant change. But a consumer internet company like us, it's good for paid volumes to go up, right? So it's good to get more people paid into the subscription sort of a thing. So yeah, your question is right, that it's good for paid subscription to move up.
Okay, well, a fascinating space that you guys are in. I wish you all the best for that and more, Sushant. Thank you so much for being patient with my questions. Appreciate your time.
Thank you. Have a good day.
That's the Chief Financial Officer of Matrimony.com, Sushant Pai, talking about what could happen ahead. Remember, a small buyback, but yep, it's a second buyback as he highlighted. So the stock is flattish currently. Can I just put a 1-year chart of Matrimony before we get to the listing of the day? And Matrimony, today's session is flat, but just get the longer term chart here. It's gained in the last maybe quarter, half a year or a quarter. Since March or April is when the stock has started inching up a little bit, but the 12-month performance about 26%. Okay, the markets, just before we wrap up and before actually we show the new listing, the markets, the Sensex is actually down. A lot of stocks have corrected in the session today. A fair degree of pressure there at the broader end of the spectrum too. So bear that in mind. Nifty 50 down 0.5%, and small caps, just bring that one up. The small cap index before we get to the listing of the morning. The small cap index, not as bad, but in the red for sure. Okay, another day, another listing. Baazar Style makes its debut on the bourses. Remember, the discovered price was flat as flat can be. So is it a factor of it listing on a day which is not looking all that great or otherwise? Remains to be seen. But as the management comes onto the listing, and a momentous day for any company that is getting listed. Unfortunately for Baazar Styles, the listing pricing, the listing price is absolutely flat. 0.96 or 1% higher for now is Baazar Style. Remember, Samina highlighted in detail about what the company does and what the outlook ahead could be like. Now, will they, over the course of the next 2 or 3 years, pick up steam? I think I would urge you, before I wrap up this show on India Market Open, to hear the IPO Adda that is there on all our social media handles to get a sense of what the company could do over the course of the next 2 or 3 years. For now, it's a flat start for Baazar Style. It's a wrap on India Markets Open. Up next on Profit Insights, we speak to Manish Dangi, CEO and founder at Mosaic Asset Management of whether this is the prime cycle for equities or are there other pockets to bet on.